All right. All right, guys. Good morning. Good afternoon. Hopefully you can hear me. All right. I'm gonna get this call started right now. A lot going on here in crypto world. A lot of times when these drops happen, they look drastic, but this is the center, pretty much not really the center line, but there was some mid-range support. We got support down here, and we got some mid-range support here, here, resistance, support, and we're hitting that right now. If I take this all the way up, you'll see it's pretty consistent all the way up here. Boom, boom, boom. Boom, boom, boom. And some resistance there on the way up. So what does that mean? Does that mean it's going to bounce here? Well, no, it's possible to fall through, but and these are the instances when it has coming from the top, falling through to the bottom, coming back up, going to the top, hitting it, falling through to the bottom, coming back up, hitting it, hitting it, hitting it. Sometimes it came from the top, hit it, bounced, hit it, bounced, hit it, bounced, 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 and went all the way back to the top. So right now, by the way, this is XRP. Right now, where we're bouncing is at $1. I mean, where we're hitting right now is at $1.90. And if I just continue this down and bring this over, I'm not even sure that's the right. It's probably more like that. The next level down would be right at the 176 range where we would be double bottoming here. We talked about that. Not last call, but probably the one after that. Same with Bitcoin. We're probably could be coming down for a double bottom before we break out. And if we don't break out after that, I've had this circle down here for a while. And it does look like we broke the upward trending support after testing the horizontal resistance and the white line, which is the upward trending previous support as resistance. We wicked right up to it here. And we did not break out to the upside, which would have been necessary. Instead, we held as resistance underneath this white line. If I zoom out, this white line is kind of important. That's the overall upward trending previous support going all the way back to basically the bear market bottom back here. If I take it all the way down to the 15.5 range, right here was 25,000 right here. We hit it a couple times at the 50,000 range. We hit it here at the 74.5 range. We hit it here right there. We bounced a little bit and then went through it and retested it, and then fell. So that's not necessarily good, but there is some good happening. And that is the stochastic RSI. So let me show you that. Also, we do have a green dot on the weekly time frame on Market Cipher with a double green dot down here, money flowing, coming back out. The last time we were below this line here, guys, see this dotted line down here with the solid line underneath it? You go back in history and look, the last time we had a double green dot underneath that line was here, where we had a nice big drop. And right when those green dots happened, we did have a red candle first and then a bounce. If I go and look at right here, this green dot, money flowing up, wasn't quite as low as the current one. Green dot, if you look at the candle, it's on this green candle right here. Right after that, we had two red candles before the big pump to the upside. So right here, we have the double green dot. If I put the dotted line right where the green dots are, which are right here, it's that red candle, and then we have one more happening right now. So does this mean money flow is getting ready to flow in, and we're going to pump out to the upside? We pretty much have all week for that to happen, but because this is the weekly time frame. But this is positive. This is one positive thing happening. If I go back even further and show you, anytime we have a green dot down here and a double green dot, whoops, down here, this far down, it is usually followed by a pump, but it doesn't mean that it's going to pump really high. This one, no double. These are the only two doubles I see. This is the weekly time frame, so this is going all the way back, guys. This doesn't happen often. Okay, so as you can see, this is 2014, this is 2015, this is 2018, this is 2022, and now this is 2025, where we have a double green dot down here. So just looking at those alone, there's usually a pump. Let me just get rid of this so you can see it. There is usually a nice pump, but this one was already in a bear market. We had that big drop. We had the green dots, and we had a big pump, but it did not make a higher high. And most recently, this was the most recent one. We were coming from the all-time high. We technically were in a bearish market right now, which is kind of like what we're seeing right now. And then we dipped really low here and had those two green dots, and we made a nice big pump. And when I say nice big pump, let me just show you how high, because it doesn't seem like much in the grand scheme of things. Technically, we were still dropping, but we went from here back up to here, which was a 42% move to the upside, which is kind of big. I mean, if you think about it, that would bring us all the way back up to like 112. So is that going to happen, though, just because it happened in the past? That's the question. Now, let me look at something else here. Let's just go to the regular RSI, stochastic. This is good news. On the weekly, we do have well, not really. Here's what's going on. So this is bad, actually, guys. So we did have a blue line cross the orange line to the upside. As I was saying on the last call, this blue line and this orange line need to get above the 20. If that happens, then we're going to see a big move to the upside. And on the last call, they both were wide apart, both heading up. But as you can see, if we zoom in here, the blue line just now crossed back over the orange line to the downside. That's bearish. If we go to the regular RSI on the weekly, we had bearish divergence already, been going on for a while, where we have the price getting higher and higher and higher from this point right here in the price was right here at 74.5. And we went up to 108, 109, and then we went up to 112, then we went up to 123, and then we went up to 124 and 126. So the price was going up on the RSI. The peaks were going down. So we had lower highs here, higher highs here, bearish divergence. Last time that happened was in 2021. And that was the second time it ever happened. Generally speaking, when we get down here below this floor, it's bearish territory. I was saying that months ago that we need to get back above that, but in order for me to think bear market, I mean, generally speaking, guys, this is what if I wasn't on this call with you guys and trying to go through every single possible, uncover every stone to see if there's any glimmer of hope or anything like that, I would have just presumed that we were, once we broke below this floor here, back here when we did it, as you can see, we came below it and we came back up and retested it, and we broke through for one more test of the downward trending resistance, and that was here. We hit all-time high. We came all the way down to 29K, came all the way back up to 68K, came all the way down right here below this floor. Boom, all the way down to 37. We bounced, and then we came up for one more attempt. That would be equivalent to us breaking out right now of this downward trending falling wedge to the upside. But it doesn't look like it's trying to do that, because if you look at the RSI on the weekly, we're not only still below this, but we're heading down still. So that's like this. We have a little curve. We have a little curve up, but then it's going down more. And so last time that happened, guys, it was like this. We came right here below the floor, right here below the floor. The price dipped down. We had a little bit of a bounce, and then we dropped even further. And we had a bounce, and then we dropped even further, and we had a bounce. So I can't predict the future. I don't know what's going to happen, but this grayed out area that I have here is pretty much the floor for the price. And if we come down below this dotted line on the RSI, then it could be it for the bull market of this season. Now, let me also add that that's only if this time isn't different. That's only if all of these catalysts and all of these things that are taking shape don't somehow come in and save the day, which could happen, because let's just go back and look at when that happened before. Very similarly right here, we hit an all-time high. Well, I'm sorry, this was a bull market top, bear market bottom. We go into what looks like a bull market. We start to come back out, and then we drop way down after peaking here and lower high, lower high, lower highs. And then we drop all the way down here where we do get below that floor. And then we immediately climb out to a parabolic move to the upside. Here's another little incident. Oh, no, that's the same one. So usually it happens after bear market bottom. Now, is it possible that hitting 80K is a bear market bottom already and that we're ready to climb out already? Is that possible? I mean, historically, it takes about a year to go from the top, which was 126, down to the bottom. But is history going to continue to repeat itself? Is the question. That requires a crystal ball, because I can only tell you what has happened so far. Can't tell you what's going to happen. But we can look at all of these different indicators and get kind of an idea based on history what is most likely to happen. But I can't say for sure that will happen, because we got a lot of catalysts, we got a lot of things going on, and we also have 2 weeks left of this year, 2 weeks left of the 12-month candle, and historically that has also been the biggest pump to the upside. So we got a lot of contradictions happening. We got the end of a bull market, historically the end of a bull market cycle, which is normally 3 years up, 1 year down. We are at the end of the third year. We have 15 days left of that third year. Historically, that last 15 days or last 30 days is usually a huge pump to the upside, anywhere from 30 to 45%. And if that happened, that would bring us right back up to maybe even a new all-time high, 130, 140, 130 maybe. But it doesn't seem to be happening. And we also seem to be falling below the overall upward trending support line. So let me just show you what that looks like in previous years. support, bear market bottom, support, 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 3 years up, new all-time high. We come down and fall through the upward trending support, bear market bottom. We come back up and retest it, can't hold above it, fall again, and then finally break out. Back here, bear market bottom, very similar, very similar. If we look at this and we just bring that all the way up, we had a similar thing right here where we had a bear market bottom, we hit it, we stayed above it, we hit it, and as soon as we fell through this upward trend in this bull market right here, we fell through, and that was pretty much it. We also flipped the EMA ribbon bearish and stayed under it until the bull market started. So here in the current bull market, we've already broken this upward trending support. We also flipped the EMA bearish. So, I mean, we could have our blinders on and say, and be optimistic. But when I look at this from a technical analysis side, I would say that this is a bearish situation. And why though? Why would it be? Why should it be with everything else going on in the world? Well, I mean, there's a lot of things getting set up. Someone posted last night about Swift choosing the Linea network and Ethereum instead of XRP. First of all, that's kind of old news. I mean, that was back in early November or somewhere in November. I can't remember, but that really doesn't have much to do with XRP as much as you think, because Ripple already has contracts with the main, I think it's Rude or Rune or something like that, Rune, which is totally tied in with Swift. And I think Ripple would still be handling the settlements. What that's referring to is the communication and the messaging system, not necessarily the financial transaction settlements. So let's see here. Marlon, bear market is where the big money is made. Yeah, I mean, this is where you accumulate. If you're trading on a coin margin, you can accumulate a lot of Bitcoin, XRP, and everything else on the way down. But the question is how far down is down? Where is the bottom? And you could take a bounce on 70K and think that's the bottom, and we could drop down to 50. And then you could think that's the bottom, and we could drop down to 30. So knowing when the bottom is in is kind of crucial to make the maximize your gains on the next bull market cycle. But Keith, Swift is basically just a messaging system. Yes, it's still going to highly depend. I think this is actually good news for Ripple and XRP, and I don't think it really affects what's in store for XRP. XRP is a far superior settlement token. I mean, Ethereum's been nothing but problems. Layer 2, okay, is it fast? I don't really know. Not nearly as fast as XRP and XLM. Is it cheap? No. Gas fees are huge. So I don't know what they're talking about, but it doesn't. I think it's a look at this while we do this over here. Look over here while we do this over here. It's a wag the dog situation. Plus, not only that, but Swift handles like 11,000 banks around the world. That is true. Ripple is already in contract with almost 1,000 banks, but Rune, I think it's Rune Network, which is the network inside of Swift that handles all the cross-border transactions, is already in bed with Ripple and XRP. Swift didn't choose anything. It's just testing Ethereum layer 2. It's a pilot project, but it's for the messaging system. There's a lot of vagueness in these articles that people share because the headline sounds like they chose Linea over XRP, but they only chose that over a pilot project where they're testing, and they've been testing. By the way, they've been testing all kinds of cryptos for the past couple of years, I think.
Jake was was talking about something about once you see the oil spike, that's when everything's going to go up.
Oil, yeah. Yeah, there's a lot of there's a big web out there, guys, of things happening, but I'm sure they want to keep things hush hush on XRP too, because they don't want millions of people pouring in to buy XRP at $2 right before a huge uh, price adjustment. And I think it's one of those things that whoever is already there is going to benefit. And I don't think they really care if some people get rich. What we're talking about is a tiny fraction of the entire population, tiny fraction of even the people who hold XRP will get rich because most people, most wallets hold $250 worth of XRP or less.
Hey Nico, can I ask a question about a trade that was posted?
Hold on. Yeah.
Oh,
Yeah. Chad just shared this in the group. Just noticed this on my RSI. Let me just look at that for a second. Let me just get this call. This is something I've been waiting for 3 days. Give me 1 sec, guys. Okay, I'm back. So, yeah, I mean, as you can see here, this is, I mean, once we get under this white line here, this dotted line, guys, it's usually, that's usually the bottom. But we do got a little bit of ways to go before we below that line. But it is kind of an indicator. I mean, look, I mean, go back throughout history, and this only happens a couple times a year. But see right here, guys, when we popped back up and broke above the downward trending resistance line, that was right here. This was when we were when we called the bottom in this group was 17K. We literally called the bottom here in this group at 17K. What we forgot was, and what we weren't really thinking of probably is the breakout. When it broke out here is where it broke out of this downward trending resistance because we called the bottom here when it went below this and started to come back above this line. But what we didn't take into account is the price could go lower, even though it's above this line, because when it broke out, it came all the way up to right about 19K, and then dropped down to 15 just to retest this line. Boom. And then that was it. We were off to the races. And so over here where we're at right now, if we were to drop down below this line, it would probably be brief. It would be a bottom. Remember what I used to say, guys, if you've been here a long time, is that the bottom, the real bottom, never sticks around long enough for you to catch it. It's usually pretty quick where it climbs out. I mean, look at this, guys. This is 2010. Never, look at that. We wicked down below it for a second here and climbed out. Wicked down right to a second, climbed out. Right for a second, basically, climbed out. Not really a second because this is like, this is the weekly chart. So, I mean, we're talking about maybe a couple of weeks tops. So that's how quick you know. But all you got to do is look at the RSI on the weekly time frame, and you'll see we could be heading towards that line, but there have been times like this, guys, where we did come down as low as we are now without crossing that line and jumping out to a new parabolic move to the upside, which is right here. But that was in the middle of a bull market when that happened. As you can see here, we already hit the bear market bottom here, and we did climb up, and we did not make a new high yet, and we come down first before we popped out. That was strange times, though. There was some other weird stuff going on back then. But thanks for pointing that out, Chad, because it's important, guys. We are either on our way to the bottom or we are about to see a parabolic move to the upside. And I know that kind of sucks to be kind of right there in that situation, but I wouldn't say that we are in a bear market unless we break this yellow zone that I have here, which is the 70K, pretty much the 60, yeah, I would say 68.9, let's just say 69,000 to 73.8 zone, which was the previous all-time high. Let's just take this all the way back. Previous all-time high right there, 68, right to the 73.8, which is where we came down and retested this time, where we were tested as resistance here on the way up. We broke through and retested it here as support and bounced. If we come down to that level, 73.8, and break through that, yeah, then we'll probably be down below this, guys, and then it would be getting your ducks in order, getting ready for the next move to the upside. That would be I mean, guys, because just imagine this. Remember when we were down here? Those of you who do, some of you were in this group. Remember when we were down here? Could you imagine going long here, guys, with a little bit of leverage? With almost any amount of Bitcoin or USDT? You would have ate extra money without leverage. Add some leverage to that, add 10x leverage, that's 80x. That's life-changing. So catching a bottom obviously is good. Catching the top is good. I don't know how many of you shorted 126 and are still in the short, but the reason why we did short it, by the way, but we didn't stay in it because we bounced on the upward trending support. And we just think, okay, well then maybe boom, we're going to go to a higher high. But when we flip the EMA on the weekly, when we flip the weekly EMA, let's just look at, I mean, it's historically, it's generally speaking, it's not good. We'll go back here. And so, and not only that, but the upward trending support, we broke through that. We flipped the EMA. And yeah, it's just very, very low buying pressure, very low volume in the market, weird stuff going on. And what I mean by that, I mean is like nothing but positive crypto catalyst happening and the price going down, which to me is like a fake out. To me, it's like a wag the dog situation. It's look over here while we do this, and then we're going to do this over here. You know, it's kind of like just get ready because anything could happen any moment kind of situation. John Larson shorted BTC from 126, added some in. Now it's down to 124-ish. What is down to 124-ish? Your entry? Good job, man. Good job. You're still in that trade, John?
Yes.
Excellent. Awesome job, man. Just reading some of these messages here.
It just seems to me like a perfect time for a fake out or a move to the upside. But
I agree. It's one of those weird situations. If I knew for sure, guys, I would be telling you, but this is kind of like right on the edge. It's right on the fence. It's like it's do or die. I mean, we are in a falling wedge, bullish. But that's the only thing that I see bullish at the moment. And every time, look at this one, boom, broke to the upside. Look at this one, boom, broke to the upside. Look at this one, broke to the upside. Every time, except for there's a couple problems. We already broke the upward trending support. We flipped the EMA ribbon, and the RSI is below the floor and on its way to the 20 or the 30 on the RSI. And then when I look at the actual the stochastic RSI, we have a blue line crossing the orange line back to the downside after already being on its way up right here. So we were down here at the bottom, guys. You can't get any lower, boom, right? And it crosses the orange line to the upside. It needed to get above this dotted line for us to have another move to the upside. And look, it just turned and crossed the orange line again to the downside. That's a little scary for the price, but in the short term, it's all short term because there's no doubt in my mind that we're going to see not only parabolic moves to the upside with Ethereum and XRP and many of the altcoins, but also Bitcoin, guys. Bitcoin could be $100 million in 20 years for one Bitcoin. It is possible, but what for? Why would it be? And what does it do? And what will it be used for? Nothing other than a store of wealth, like gold. Now, gold does have some other uses because you can make jewelry out of gold. In fact, that's the most common use of gold. But billionaires aren't buying it for jewelry. They're buying it as a hedge against inflation. Bitcoin can be used for that as well. It could just be used as a holding and a tool against inflation and a backing of the US dollar But other than that, it's not utilitarian like XRP or even Ethereum layer 2 because it's not fast, it's not cheap, it takes a long time to transact in comparison. I mean, compare it to the Swift network is still quick, but in comparison to XRP and XLM, you send XRP from one wallet to the other and it's there before you can even check. And it can handle like thousands of transactions per second. So with that being said, it's a far superior crypto to be used for, cross-border settlements. And we haven't even gotten to the derivative markets yet. Most people don't even know what that means. But when it starts handling all the transactions on the stock market and settling all of that instantly, that's a whole nother topic for another day. That's not even in anybody's consideration as far as the value of it goes yet, other than people like Jake Claver and some people that do talk about it every once in a while, but they don't really explain. But it's very complicated, guys.
So you think XRP will go to like 170 and Bitcoin to maybe I'm thinking Bitcoin maybe like at least
I'm sorry, you're gonna have to repeat that.
I'm saying, so do you think XRP will go to like 170 and Bitcoin to maybe in the 30s?
Are you talking about the lowest price, $1.70? Because when you say 170, I was thinking 170.
No, I'm thinking $1.70.
I mean, it could. Yeah. Oh, for sure it could. Yeah. I mean, it already did. Let's just go back and look. Oops. XRP.
Nico, this is why I love what we do. We just react to price. Whatever the price is doing, that's what we react to. We don't know if it's going to go to 30,000. We don't know if it's going to go to back to 130,000. But what we do is we respond to the price and what it's doing.
That's right, guys. Learn to get reactive instead of predictive. Don't try to guess what's going to happen. We're reacting to what's happening, and when it breaks certain support and resistance. Now we've been in this range for a long time, guys. Let's go back to here. This was a year ago, 1 year ago, right here. We've been in the sideways range now. Huge pumps, dumps, but still in this range. And yeah, right here we were at 170. Right here we hit 170 to be exact. I think. I can't remember, 180 maybe. Here we dropped all the way to 125 on that big dump on October 10th. But here was a nice little, and by the way, look at this. Even when we dumped to 125, billions poured in and pumped us right back up into the channel instantly, quickly. That's just a wick. So that didn't last, right? And then we continued to trend downward. Here we hit 179 or something like that, 180. And then possibly coming to double bottom that, I think. We're breaking this. We possibly are breaking this downward trending support. This is kind of a center line here. It's not really in the middle, but let's just look at it because we had a lot of support here. Here, we broke through resistance, support, resistance, and support. So there's obviously a line there. Support, breakthrough, resistance, support. We're hitting it right now. Is it going to bounce on this and continue the downward trend? Or is it just going to wick through? I already have the circles there, guys. The circles have been there. Kind of funny because I put that circle there on the last call, the one before that, because this zone that I have, this blue zone, is the whole zone. This whole little floor, as you can see, this is not showing the price, but we came up from a similar sideways trending channel down here. Before that, we were in another one down here. And this is just the most recent one. But when we came up, this is the line right here. When we came up, right there, boom, we went above it and held a support here. And then since then, we've only wicked to the bottom of this and the center of this, the bottom of this, the top of this, the top of this, the center of it, the top of it, the center of it. And we're in the center of it right now. So could we wick down to the bottom of it? Yes. Will we go below it? Is it possible? Yes. We did it once, but look how fast we popped up when that happened. So my prediction, I don't like to give predictions, but my prediction is we could probably hit the bottom of this, which would stay inside the downward trending channel and hit the bottom of this zone and probably pop out pretty quick. To where is the question? Is it going to pop out and break the downward trending channel like this one did and then hold as support like this one did? and then climb. I mean, this one climbed and then came back down to retest it one more time before pumping up. But is it going to just repeat what happened a couple times before? Or are we in trouble? Is it going to go down below this? So the thing that I will do is I'm watching, I'm waiting. And if it does, I'm going to probably long this, right? With a tight stop, maybe not that tight, but if it breaks below this, like this, that's okay. That's just a wick. What matters is it going to hold underneath? In other words, is it going to wick below and then hit it and then cannot get back through? Because that's a different story. That has not happened yet once where that's happened in the last year. But if that happens, that's a totally different game that we're playing now. And that could be a test of fate. That could be a test to see how strong or weak your hand is. Do you have diamond hands or paper hands? Is that going to scare you out of the market and cause you to sell all your XRP because you want to stop the bleeding because you just can't handle this anymore? Or are you going to say, hell no, I'm going to buy more down here?
Hey, Nico.
Yes.
So if we're to deploy another chunk of money, how long are you waiting, and what would your entry point be? I mean, obviously, we're in it for the long haul. So you see us going much below that 176 area?
I don't see it, but I'm always one to say that everything's possible. I don't see it. I don't really foresee us getting much lower. I think we are at the bottom, close to the bottom. When I say at the bottom, I don't mean the bottom, like can't go any lower, but this range has been the bottom for the last year, and we're in it. We're in the thick of it.
So just putting in, deploying a third, or don't worry about it.
I'm not, as far as buying more in my hodling accounts and, cold storage and stuff like that. I can't say I've reached my limit. I bought a lot. I'm sitting on a lot of XRP. If XRP does anything, $100, $200 in the next year or so, it'll be lottery, like mega rich money. But, and I'm certainly not saying that to brag, because what if it doesn't? What if it drops? What if it goes all the way down to 50 cents? Right now, is that possible for it to go down to 50 cents?
Everything's possible.
Yeah, that's why I always say everything's possible. But what will happen? What will I do if that happens? Well, you got to read the room as well. Is it over? No, XRP is putting billions of dollars into infrastructure, billions and billions. I mean, Ripple network. Garlinghouse is meeting with presidents and leaders of other worlds and getting contracts with thousands of banks around the world. Something big is about to happen there.
Well, they're just doing what they teamed up with Solana, correct?
And Citadel.
Yeah, they got lots of contracts. Rune is one of the biggest ones, and most people never even heard of that. Rune. Here's the thing with Rune. Rune is already in bed and fully integrated with the Swift network. So Swift is talking about Ethereum, but Swift has no choice but to work with Ripple. It's already there. It's already integrated. They've already been testing that. So this is just the latest pilot project with Ethereum for their messaging system, but I don't think it has much to do with what it's all going to have to be cleared and settled on the Ripple network, as far as I'm concerned, even Ethereum layer 2. So I think that's like a smokescreen to kind of get people wondering and worrying, but I'm not worried about that.
So in the same tone, I have another question. With those wicks that you have, that those quick wicks that they go down that fast and come right back up. If you have your stop loss anywhere on those wicks, do you lose at that moment, even though it goes down that fast and goes right back up?
It should stop you out if you have a stop loss, yes.
Okay.
If it triggers your stop loss, it'll take you out. There have been people saying that their stop loss did not get hit on some of these drops, but I didn't see it. I didn't see it, and I didn't see their back office and see that they didn't get hit. I'm just going by what they say. But there have been times when people's, take profit. Remember, your take profit target and your stop loss is a conditional limit order. And it also depends on whether you're on mark price or last price or index price. See up here, I'm always on mark price. I probably should be on last price on my chart, But when you actually take a position and you enter and you put your TPSL and all that stuff, you want to be on mark price. Okay. So, and Bill can explain that on either basics or on the basics call, but because, and the reason why is because if it wicks down and you're on last price and it wicks down, it could miss your stop loss because it looks like it went through it, but it didn't trigger it because you weren't on the right, because it's a congregation, or not a congregation, I keep getting this word wrong, an aggregation of a bunch of different platforms and the most accurate price. It's trying to get the price based on all the different platforms out there price. And you want, if you're using last price, it's only the last price on this platform, not necessarily the last price on all the platforms combined, or the average of the last price. So that part can get a little confusing. I just always leave mine on mark price, but I might be better off leaving the chart on last price because it shows you more. It shows you where the price actually went on the chart rather than the mark price. But to answer your question, yes, you could get taken out here. If you want to take a long position on XRP and you want to not get stopped out and you want to give it enough room to breathe, you're going to have to take risk, just like on Bitcoin or anything else. What that means is you're going to have to either not have a stop loss, or you're going to have a stop loss so far away that if it does finally get to it, you're going to lose 30-40% of whatever you were risking on that trade. So that is risk. I'm sorry.
Yeah, because I've been liquidated, not done traded contracts on my through my phone. I've not been able to look at the chart at the moment, just seeing kind of like the numbers going, and it's just say for example, I've been like at a positive, just say I was at a positive 12%. I'm going up. All of a sudden, it just takes a pause, and then I'm all the way at a negative 450, and I've been liquidated with everything that I have inside my trade.
Fade the move, my brother. Google it or chat GBT it.
Say it again.
Fade the move. You want to fade the move. If you don't know what that means, go chat GBT it, man. That's what all the smart money does when you see a big ass wick like that.
So when also based on your question or your comment about getting liquidated, when you were up 14% and then in a small little move you're negative and getting liquidated, how much leverage are you using, and where is your stop loss in relationship to your entry?
I definitely I'm at a higher level. I'm at a 25% leverage, so I'm way higher than
25% or 25x.
No, I'm at 100x and a 25%.
Okay. Okay. So you just answered your own problem.
Get rid of the 100x.
When you're at 100x, your liquidation is so close to your entry that so let's just say that right here is my entry. I just went long right here, right? Let's just say, hypothetically, I just went long right here. And all of a sudden the price goes up. I'm up 14% right here. Now, if I'm at 10x leverage, my liquidation is down here. But if I'm at 100x leverage, my liquidation is right here. So I'm profitable, and all it does is come down a little bit below my entry. Boom, I get liquidated. So you're not giving yourself any room for mistake when you're that high leverage. And I'm not saying there's something wrong with it. We got people in here who do quite well with high leverage. John Larson's one of them. But you got to know that when you were up here at 14%, your stop loss has to be between your liquidation and your entry. And if your liquidation is 10% away, you got to put like a 1% stop loss. Or as soon as you go to 14% profit, you put your stop loss in profit. And then if it does come against you, at least it takes you out in profit. Or the other option is, as soon as you're up 14%, take it, close the trade out, take your profit, wait for the next trade setup. Now, imagine if you did that every day. Imagine if you guys just took 1%. Whenever you were up at least 1%. And by the way, with the fees and everything, that's like almost 3%. You got to be up like 3% or more. But let's just say you took that profit every time you were there. Anybody want to admit that if you did that, you'd be a profitable trader?
100%, and I can concur on that because when I've done contracts that have been liquidated, the only thing that separated me from a 1% and a 12% was that I just had a lot more money inside of my trade. So at 1%, I was able at times to even walk away with 3, 4, 5 grand. So I didn't even need to go any higher than that.
That's right. And guys, what if you just took 1% per day? What would that do for your portfolio over the course of a year?
You're a winner.
Heck yeah. And not only that, but consistently profitable and hugely profitable, talking about hundreds of percentage points a year. You grow your account at, let's just say you grew your account at 300% per year, 1% per day. Let's just say you did 1% per week, 52% per year. You do realize that's better than the S&P, that's better than Warren Buffett, that's better than everyone else. I mean, not everyone else. There are people that do much better, but my point is that that would be considered very successful, because if you compound that over a 5-year period, I mean, you can grow. There's also something called the 2% rule, which is if you do 2% per trade, not per day, not per week, not per month, but per trade, 2% gain per trade, you can turn $1,000 into $1 million in 300 trades. Takes 300 trades approximately to turn $1,000 into $1 million at a 2% gain per trade compounded, which means that you're not taking the money out. You're making 2%. You got $1,000 on the trade. You make 2%. That's $20. The next trade, you make 2%. Now you're making 2% on 1,020. The next trade, you make 2%. Now you're making 2% on 1,060, so on and so forth. That's compounded growth, and it takes 300 trades to turn that $1,000 into $1 million. Now, are you going to consistently make 2% per trade every single trade? Well, not some trades you might make 80%. Some trades you might take 20%. Some trades you might lose 5%. But if you took the profit every time you were in profit, guys, I know this is true because if I could say the same thing about myself. You know how many times I posted in my trade signal channel where I'll share my open positions, say all trades in profit. If I would have just closed it out right then and waited for the next setup, but sometimes I stay in too long and I go negative on one of them and then I wait for it to come positive. My current positions here, look at this, two in profit, two not in profit. Let's just scroll up a little further because I've done this. Current open positions. Sometimes I'll post and I'll say all current positions in profit. And I'm guilty of it too, guys, because it's human nature to expect more. We're expecting more to come. We think it's going to continue up or we're in profit on our trade. And we just think, oh shit, well, I'm up 20% on this one, 30% on this one. If it just goes up a little bit more, I'll make 100%. Well, and then it goes back down. And you're like, shit, I should have just closed it out and taken that profit. Yeah.
That's how I got liquidated.
So
Are you trading in cross though? Or are you trading in
I'm never trading cross personally.
No, I'm asking the gentleman, is he
Oh.
trading in cross? Because sometimes if you trade in cross, a lot of the times your liquidation will be pushed far, far away versus isolated. That's why a lot of people trade in cross. So
That's
that could
the
be
whole reason
that could
we
be
trade in
something.
cross.
Yeah. You push your liquidation like out the way, like literally.
That's
If
true,
you-
but your liquidation is no longer your margin. You're pushing your liquidation further away, but it's not the amount that you're risking anymore. It's your entire account balance.
Yeah. Well, that's
You
why
don't
you
wanna-
put a stop loss.
That's
still-
why you don't. That's
Well,
why you
well-
don't open a bunch of trades when you're in cross, unless you have a ton of margin.
Yeah, exactly.
Just
Well,
remember,
well,
guys, if you're trading on cross, you need a stop loss. The stop loss will prevent you from losing more than the percentage of your stop loss away from your entry. But if you're trading on cross with no stop loss, your liquidation is everything you have.
Well,
in that account.
is what Nico's saying. It's what's happening with me is that I'm trading at 100x. So what's happening is There really is no stop loss because I'm not giving myself any room.
Yeah, you don't have room for stop loss. So your liquidation is so close that when it hits it, that is your stop loss. It's stopping you out, taking everything. That's called liquidation. Guys, when you start to really
But
get
if you're
good
in
at this,
cross
you should
though,
not get liquidated.
if you're in cross and you trade high margin or high like 25x or 50x, then that means you take your contracts down. So your liquidation will still be far away. If you got high leverage and you're trading high contracts, then yeah, your liquidation is going to go closer. But if you're trading high leverage and you take your contracts down, your liquidation, you can look at it. It's still going to go down, far away, down, down, down.
Yeah.
So you either got to do one or the other. You can't
Yeah.
do high leverage and then trade a whole bunch of contracts. It's just not going to work. Your liquidation, yeah, in cross or isolated, is going to be closer.
Hey, let me ask John. John, if you're listening now, can you come off mute? When you're at 100x leverage, do you start the trade with 100x leverage, or do you increase the leverage and add contracts?
And isolated, you would start low and then crank it up once you're configured. But when I'm in cross, like I've been posting, pardon me, all my cross ones on Mexi are 300 to 500x leverage from the get go.
Yeah, so
off the rip.
you're confident in the break of the position, you're confident in the break of the support or the resistance. And now when you are in profit, when it goes into profit, do you use a stop loss? Or do you put a stop loss?
Always.
Yes. So
yeah, I just like this weekend where we had that big dip on Sunday. I actually had a couple of longs that went in. I put my stop about the 100% cash out line, and they all cash out this morning as it dropped. So yeah, you absolutely have to put stop losses in profit, otherwise you'll nuke yourself.
yeah, and guys, look at this. So this is just an example. I mean, I was in 1, 2, 3, 4, 5 open positions, couple negative, because I opened those earlier on. And then we're not talking about huge money here, but if I would have just closed this one, and closed this one, that would have been $500 profit. I mean, I was up, or 425, right? That would have left me in these negative ones, right? But then I might reopen this one if the market was turning, maybe short instead of long. And then as it's going down, I would make profit on the short while my long is getting more and more negative. So the problem with having multiple positions like this, one like Bitcoin USDT and Bitcoin coin margin, as you can see, one's in profit and one's not. Why is that? Because I opened this one days before it dropped. Once it dropped and bounced, I went long on this one, knowing that it was coming up, but it was going to take a while for this one to get back to break even. So that's a risky game that you don't need to be playing. You don't have to be playing musical chairs with your trades. I do it for several reasons. One, I'm teaching, and sometimes I'm already in open positions, and I can't take a long or a short to show somebody something unless I open another position on another, pair. So like opposite of the one I'm already in. So sometimes I do that, and I take a position with my most best guess of where I think it's going to go at that moment, just so I can show someone how to enter position. So I'm literally risking my own money just to show somebody something. And sometimes I just stay in the trade or move my stop loss tight just in case. And a lot of times it works out in my favor. But if I wasn't demonstrating and if I wasn't trading in front of an audience, I would be closing these trades out much faster. I should do it anyway. But the point is that when you guys are doing it, I think some of you stay in because I'm in, or you see my open positions, you're like, oh, I'm just going to do what Nico does. Don't do that. John doesn't do what I do. And John is making, well, once you get experience and you know what you're doing, let's just go into.
I never stay in a trade longer than maybe like 40 minutes.
Say again?
I'm usually never in a trade longer than 40 minutes.
Yeah. So if you're scalping like that, all I can say, guys, is do yourself a favor, especially if you're new and getting the hang of this, or even not new, but you're just starting to get on a roll, is take profit. No one ever goes broke taking profit. You got to take the profit. And I think what happens is greed kicks in and we say, oh man, I'm up 14% or I'm up 25% or 40%. And then you stay in and you don't even put your stop loss in profit. You stay in and then it comes back down to your break even point, and then it goes below that. Now you're negative, and some of you are literally closing the trade out negative, not even waiting for a stop loss or a liquidation. You're just closing the trade out negative because now you realize you made a mistake. And so you're literally opening your position, getting into profit, not closing it, waiting for it to come back negative, and then closing it, almost like you're trying to lose money.
Quick question. Quick question for
Yeah, go ahead.
quick question for John. Are you trading high contracts? Like if you got 5,000 in your account, are you trading 2,500 or are you trading low, basically money? Because that's the way you push your liquidation out of the way. If you're trading that high leverage, from my understanding and from practicing.
I can answer that before he jumps on and answer that. I can tell you this. Would you rather make 2,000% gain on $50 or lose liquidated on $5,000?
Well, that's well, I'm asking because I think I know the answer. I mean, I pretty much have the answer, but I just want to know, is he doing something different from what I'm doing?
Yeah, well, if you're going to go high leverage like that, 300x on MEXC, you can't be betting the farm. You can't be doing that. And so he's making lots of high percentage gains, probably on a smaller amount, but he's not risking as much. So therefore, you can handle
that's
that.
what I was just saying.
But John, I'm not going to speak for you. You can jump out and answer that.
Yeah, I wanted to know, was he doing something different than what I've experienced?
Yeah, I'm a complete and unique animal. What I'll do is I'll start open positions at the higher leverage. You can actually use less of your own money as the opening margin. So a lot of my openings are literally 50. Some even as low as 10 cents to open the position. Once I see where it's going, I think my biggest position right now is $20. But at 5,000x, $20 is now literally sitting at over $1,000.
Yeah.
So
okay.
I mean,
it kind of confirms what I was already thinking.
Let you start small, and then with all these longs that are going on right now, I got about a lot of longs triggered this morning. They're all sitting at about 50 cents. As soon as I confirm them, I'm going to drop like maybe $5-10 on each one of them, and as they scroll up, that $5-10 across 14 trades is going to turn into probably $500 by Wednesday.
Yeah. So you're adding, when you see it go in the direction, you're just adding contracts basically. So you're starting out with lower money, but then when you see it go in your direction, you just add.
Correct. Yeah, and all of them are hedged too. So like right now, all my shorts are. I think my biggest short right now is about $15. So in my mind, I have $15 worth of margin credit that I can put into an opposing long. And even though it goes to drawdown, let's say I add $1 here and it goes down a little further. I can add $5 in, I can add $10 in. Then once it hits that $15 matching pair, by then it's usually going into profit, and you can set your stop loss. That way, if it comes backwards, cash you out a little bit, then you can reinvest that, move long again, and keep going. And basically, you use your opposing trade to cover the ones that are in drawdown.
Okay, so you're basically in hedge a lot.
Oh yeah.
Hold on one second, John. John, didn't you do a call that we have recorded somewhere?
Not yet, sir. Mine's Sunday.
Okay, so
Hey,
guys,
John, are you in Utah?
Salt Lake City, yes, sir.
Yeah, brother. Hey, I'm up in Heber.
Nice.
We should get together sometime.
Cool. There's a Texas Roadhouse.
What's
hey
that?
guys, so
Maybe we'll talk later.
this Sunday, from what I understand, is this right, Bill? Sunday, John Larson's.
Yep, this
21st,
Sunday.
yes, sir.
So guys, you want to see John Larson's strategy, get on Sunday's call. Now, this is riskier, just so you guys know, for everybody on this call. We got almost 200 people on this call right now. Just be aware that there is ways to make a lot of money in high percentage gains playing a higher risk game, but it's only high risk in your mind because of the ridiculous amount of leverage. But the way he does it is strategic. So when you learn how to take high risk strategically, where you're reducing your risk, and then as soon as it goes in profit, you're eliminating your risk. This is where some of you make a mistake. You're missing this key component where you're taking high risk, but you're keeping the risk high throughout the whole trade. Whereas John doesn't do that. He's high risk. As soon as it gets where he wants him to go, I mean, it's not even high risk. I don't even think he's high leverage, but he's already got a stop loss in case he's wrong. But then as soon as he's in profit, he eliminates that risk, moving the stop loss in profit by increasing not only his leverage, but his contract size. And he's maximizing his gains and minimizing his losses. Now, this is not for everybody, just so you know. There are people in this group that are still learning the basics, and I know everybody wants to make a lot of money, but don't just think, listen, I mean, there's guys in this group who've made multiple 7 figures. And some guys in this group that have just hit their first 6 figures in a few months or a year, and multiple 6 figures. I can't remember when it was, but it was probably a few months ago when John posted in the group that he hit that 7-figure or 6-figure mark inside of, I can't remember how many months, but it takes time, guys, to understand these little strategies. But once you get it, it is repeatable over and over and over multiple times a day. You can see in the wins wall, John's post is like, these are not 200% gains. These are 2000% gains, like a dozen of them all simultaneously.
Yeah.
But he's not risking tens of thousands of dollars doing that, but he's still making a lot of money because he's risking a small amount and turning that into a bigger amount. Now, can he grow that? Can he add and play with more money and do that? Yes. But why? If you can scalp like that with less risk and less money at hand, you're not betting the farm, you're not risking your children's college education or anything like that, and you can still, pull $1,000 plus per trade multiple times a day. I mean, guys, that's a huge, and then if you're socking away the profit and you're still, in the next trade, you still risk 1,000. On the next trade, you still risk 1,000, even though you're banking tens of thousands. You're growing your account, you're growing your holdings, your crypto holdings, whatever it is, without risking more and more on every trade. This is psychology. It's the trader mentality. And I think the problem that a lot of traders have is, as soon as they start making more money or have some big trades, they want to hit a home run. And let's say you take $1,000 and you turn it into 10,000. You want to go and turn that into 50,000. So you take the whole 10 grand and risk that on the next trade instead of just going back and risking 1,000 again. Just keep doing that 1,000, keep doing that smaller amount, and
Nico,
keep that 9 grand over on the side.
Nico, that's exactly what I did. Within 6 days, I was high contract trading. Within 6 days, I started with 5,000, then I had 30,000. By the time I looked right the day of Thanksgiving, I should have never did this trade. I lost 69,000. All my money was wiped out and gone. 69,000 just on a simple trade, and I could have clocked out at 2,100. And it was I think it was at maybe 4%, and I just wanted to go higher, and I could have just clocked out and called it a day. I got wiped out. So I'm just being honest with you guys. When Nico's saying the greed is what wipes you out. Forget about the whales. The whales did come and take me, but it wasn't the whales. It was more my greed than it was anything. And
That's right. And I appreciate you. I appreciate your honesty on that. And guys, but by the way, just so you know, the people that I know that make the most money trading consistently had big losses before they got the hint, before they finally learned the lesson. They got burned several times before they finally said, okay, I'm not doing that anymore, because they knew what they were doing wrong. They knew they were taking unnecessary risk. And sometimes people just get impatient. Their account's growing. It's getting there. It's getting better and better and better. But they're like, shit, what? I've been so good the last couple of days. Let me just throw 10 times more money at this. And that's when they get their big hit. That's when they get their big loss. And then it knocks them back a peg. It's like 2 steps forward, 1 step back. Sometimes you get 10 steps forward and then you go 9 steps back. You're like, shit, why did I do that? But the good thing about that, guys, is that you know what caused the problem. It's not like you're wondering, what did I do wrong? No, you know exactly what you did wrong. And you know that if you just don't do that again, it probably won't happen again, right? So that's part of learning. The key is never giving up, because once you have that taste, guys, once you've had those trades that work, this works. It's just a matter of stop. Don't get off track and stop thinking that, oh, well, this time's gonna be different. Oh, I'm consistently profitable now. I had 10 trades in a row that were profitable. So now I'm going to go and cash out my 401k, get a HELOC on my house, and put all the money in my trading account and try to turn that into $1 million, because I just turned $1,000 into 10,000. So I can certainly turn 100,000 into $1 million. Right? And you could actually get lucky and do that. And then what are you going to do? You're going to try to do that 10 million you're going to turn that million into 10 million, and then you're going to lose the million. And so then you're going to be like right back where you start from. So please, it's easy for me to say because I've been through this, guys. I've been trading for 20 years and I've been liquidated. I've done that. We've all done that. That's all part of learning. I know what it's like. Now I get accused of having too tight of stop losses. Well, Nico, every time I do your trade, I get stopped out. Your stop loss is too tight. Yeah, well, I ain't playing that. I ain't playing that liquidation game no more. And there's no reason for you to ever get liquidated if you do this right. Could you make more by taking huge risks with no stop losses? Yes, the potential is unlimited, but you can also lose a lot more. So there's two things in trading. If you really want to be a good trader, is first, you want to make money. Second is don't lose money. I have a stock trader friend of mine. His first goal is not to lose money, not just to make money, but to not lose any. He doesn't like losing $1. He's a multimillionaire and he's cheap as hell. He doesn't even like spending $1 when we all meet out for dinner. He's like that kind of cheap. But that's why I think he's got so much money. So yeah, I mean,
I'll be honest with you, since I started this, I got liquidated 4 times. And every time that I got liquidated, the only thing I can think about is one thing. I'm not gonna lie to you. I could only think about renegades. I was told this. Why didn't I do this? And so, no, I'm being honest with you. It just always coming back and saying, Dad,
and
you
it's
just
funny
had the same
because
class.
what it sounds like to me is that you keep building your account up to big amounts too. I mean, you do it quickly, but then you give it back because you're getting greedy. So you just got to control your greed factor. You got to control that and just take a break. You have a nice big $30,000 gain or a $16,000 gain, like I know you've had. Log off your computer and take the rest of the day off. Come back tomorrow. Don't try to turn that 30,000 gain into 100,000 on the same day. That's another rule I learned a long time ago, guys, is when you've had a good day already, time to leave. It reminds me of my my ex-girlfriend. She used to like to go to the casino and she was looking for the big hit. She loved slot machines and I hated them. I didn't like going to the casino at all. I don't like gambling. But she would get on a slot machine and it took us an hour to get there, to drive to the casino. And then she would put $100. I would put $100 in and she would make 2,500 like on one thing, one pull. And I would be like, that's it. Let's go. She goes, we just got here. I'm like, I know, but you just won 25 extra money, my money. Give me my $100 back and you can keep the 2,400. All I want is to not lose money. And nope, she didn't want to because she thought she was lucky that day. Well, this is a lucky day. Look what I just did in 5 minutes. What do you think I can do in another hour? I know exactly what you're going to do in another hour. You're going to give it all back. And that's exactly what happens. Oh, and then at the end, I should have left. You're right. I should have left. But we just got here. To her, it's the fun of it, not the profit. And so my point is that a lot of you, and I've said this before and people don't believe me, but we're actually addicted to losing money, not making money. And it's been already proven scientifically at the casinos by researching gamblers, is that the high that we get by pulling the lever to see if we're going to win this next pull on the slot machine or at the blackjack or whatever is it's like swiping on Instagram and TikTok. We just slice. We're looking for another. We just keep sliding. We watch one video, we go to the next one. We're getting a dopamine hit every time we do this. And you're not going to find any. What are you looking for? You don't even know what you're looking for. You just keep swiping to the next video, next video, next video. You can't even go to sleep. You're in bed looking at your phone, swiping next. What is it you're hunting for? You're getting a dopamine of something new every time. And so same with pulling that lever at the slot machine. You might be thinking you're going to win, but really it's the loss. Oh, so you make $2,500. You pull the thing again because you're trying to win. It goes down to 2,400. You pull again, it goes down to 2,300. You pull again, it goes down to 2,000. You pull again, and you're getting a dopamine hit of going down, not going up. Because when it goes up, you should leave, but you don't. When you make a big profit in trading, you should get off the computer. That's like stepping away from the casino, stepping away from the slot machine. Take that money. Listen, songs have been sung about it. You got to know when to roll and know when to walk away, or know when to run. And there's a reason for it. And that's why there's gamblers and then there's just winners. There's the people that beat the system, the people that beat the blackjack, they get kicked out of the casino. There's guys that make millions of dollars playing gambling and playing blackjack. They don't
Having worked at a casino, the casinos make more money off the slot machines. And a friend of mine she's mesmerized by the flashing lights and the bells and the sounds. And they're paying for that entertainment. They're willing to sacrifice. Also, it was somebody talking about the psychology of trading. He said he had a friend who would start with 2,000, build it up to 20, 30,000, and then lose it all back down. It's because the person felt guilty about maybe not having an honest day's work. He didn't
Mhm.
sweat for it. And so we feel guilty. So we give it back because we can't feel worthy for being rich.
Yeah, and thanks for saying that, because no one admits to that, but that's the psychology behind it. It's called, there's other terms for it, like easy come, easy go. And a fool and their money will soon be partying, not partying, parting. And so there's a lot of sayings that relate to all of this that we're talking about. Thanks for that, Alex. But yeah, it's true, guys. And so you got to get in the habit of being profitable, but you got to also feel good about it. And you also got to, you know, if you're like I use analogies a lot, as you guys know, but if you're trying to lose weight and you're doing everything right when you're in front of people because you want them to think you're being good on your diet, but when no one's looking, you're eating cupcakes and chocolate ice cream, guess what? You're never going to fool anybody because you're going to never look different. Your body's not going to change, and they're going to know that you're not sticking to the rules, but they're not going to see you not sticking to the rules because every time you're in front of them, you're eating like a bird. You're eating salad, you're eating the right thing or whatever. But behind closed doors, you're pigging out. Therefore, your body never changes. And your friends will be like, you keep posting all these pictures of you at the gym, but your body never looks different. So you
What's
can't
fun
fool
is
people.
if you go to a Mexican restaurant and they serve chips, never eat the chips that are closest to you. Eat on the other side of the basket. It looks like everybody else on the other side of the table is eating it, not you.
It's a good way to trick everybody but yourself, but your own body. But yeah, same thing with trading, guys. Be good to yourself. You got to reward yourself. So making a profit and stepping away from the table sometimes is the best thing you can do for yourself. And it doesn't matter what anybody else thinks. No one knows. You're keeping score with yourself. No one knows how much you have, how much you made, how much you're losing, but you do. And it's wearing on you. And that's why people like John Larson and TJ and these guys, TJ, guys, I want to share. Hopefully, is TJ on this call?
I didn't see him today.
All right. TJ sent me a private message the other day, and I
He
think
is
it's
doing-
okay to share.
Yeah, he's doing better.
Yeah, TJ had a little health issue. He was worried about something. He was in the, he had and I think he's publicly said this in the group and thanking people for their prayers and stuff. So I just I'm not going to show it to you, but I'll read it to you. Here it is. This is just the other day. Hey, Nico, TJ here. I had been battling some more, tests. I'm not going to say specifically what, but he was, going back and forth to the doctor's office. They were doing tests. They found something. They had to research it and do some tests. And he says, he's free of it now again. So I really feel blessed and thankful going through the last 36 months of a lot of depression, overwhelmed with not knowing, is this my time or my time is up in this world? So anyway, I got great reports today. It's like I'm healthier, healthier than I thought I was going to be, and back to trading. I traded scalping today from 10:30 to 2:30. Now listen to what he's saying. I traded scalping today from 10:30 to 2:30. He gives himself a window. Turn 10 grand into 48 grand profit. So I did pretty good, proud of that. Felt good to get back in to do some trading. Be blessed, brother, because you are all blessed. I appreciate all the prayers and all the positive thoughts. Anything I can do, let me know. Be blessed, brother, because you are blessed. So yeah, 10 grand into 48 grand, and then he's done for the day. He doesn't keep trying to lose it. Some people got this down, guys, and it's
Well,
not that
let me tell you that once you see those numbers, I got to see those numbers. Since I found you guys, it's been like a path where I've been lucky, not lucky, but by design. I like to use those words, by design. And what I've seen in such a short period of time, I can't unsee. So
That's
I know
right.
that I know that you can make money long term by holdings. I know that you can, with you guys, I've learned that you can trade and be in a trade for 2 or 3 days. And then there's a trade where you can be in there for literally, I've been in trades that I've been on less than a minute, walked out of there with boatloads of money in a minute, and then watch some of my peers stay in the trade longer and clock out at a less number because in their mind that dopamine was kicking in where they thought it was going to go higher, higher, higher. Because of
Yeah.
my experience and hearing you guys in my head a lot, what I did was what I've done now is even if I'm working with, even if I'm doing a trade with you guys, when I see a number, I get out. I see my number, I just get out. It doesn't matter if the trade
You
keeps
really
going
got
higher,
to.
I just get out. I take my profit and I'm out.
Yeah, thanks for that. You really got to, guys. This is, we talk about mindset. In fact, there is a video in the classroom in the mastermind, and it is the mindset of a trader. You guys really need. It's a mindset of a proper trader. You need to watch that. It's 15 minutes long. And I think some of you skip it because you don't think you need mindset because you already think you're motivated. You already think you're already inspired. I'm already a go-getter. I'm already hungry. I don't need no mindset. I don't need no pump rally. I don't need no motivational speech. But it's not about that, guys. It's about being in control of your mind when you're trading because money is emotional. Money is one of the most emotional things since our birth, as we're growing up. I mean, the word that you were told the most when you're a kid growing up is the word. Anybody want to guess what word it is you're told the most?
No.
No. The word no. From the beginning, your parents are saying no. Can I have this, mommy? No. Can I buy this, mommy? No. Daddy, can I get this? No. No, 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 no. So we are, if you hide the cookie jar up in the very top cabinet and the kid knows it's there, they will climb to get it. They will find it. They will sneak it because they know they're not supposed to. If the cookie jar is just left on the main counter every day, but you have a rule, don't touch this. Obviously you can reach it. Obviously you can go and have whatever you want there. But if I see that there's any cookies missing, then you're not going to get this weekend. And you ever seen them train those dogs where they put the treat right on their nose and the dog just sits there. And as soon as they get the go ahead, they eat it. So it's like you have to condition yourself, guys, to be that way. You have to have some discipline, just like exercise, just like getting in shape, just like losing that last 5 pounds or 20 pounds or 50 pounds, whatever it is. You got to discipline yourself because no one else cares. No one cares if you look good or bad. No one cares if you get in shape or not. No one cares if you're fat or skinny. In fact, if you're overweight and you start to lose weight, hardly anybody even notices until you really lost significant weight. Then people notice, and guess who's going to tell you the first? It's going to be your family and the people that know you the best that say, oh, don't lose too much weight. Oh, don't get too skinny. You know why? Because now you're starting to really make them look bad because they're not doing half of what you're doing. And misery loves company, as they always say. And maybe some people want you to do well. I think the majority of the people want you to do well, but no one wants you to do better than them. So you got to that's part of the mindset. You got to block all that out and focus on your goal despite everyone else's goal for you. Doesn't matter what anybody else wants. If your goal is to get to 10% body fat, you need to do everything disciplined. And when you go meet your friends for lunch and they're all ordering the chips and the salads and the bread with the butter and all that stuff, and you're eating your filet mignon by itself a la carte, and they're looking at you like, you're not going to have the bread, you're not going to have the chip, you're not going to have a drink, you're not going to have this. You got to be confident and you got to be disciplined and say, no, I'm not. Damn, how do you live like that? Oh, you're just, I would rather enjoy my food than be that disciplined. Okay, well, that's why you're a fat ass. And I'm sorry to say it like that. That's just true, and we all know it.
Now you're gonna buy 2 seats on an airplane.
That's right. And I don't care if you're fat or guys, I was 270 at my heaviest, the heaviest I've ever been. And I still felt good and I still had my confidence. I was still able to go do whatever I do, but I didn't really realize how much weight I could lose or that, and I lost 70 pounds in a year because I just stopped listening and stopped caring what everybody else thought and just realized that I got to do this for me. Otherwise it ain't going to happen. And in a year, I lost 70 pounds and felt better than ever and got in the best shape of my life, probably since I was in my 20s. Because when I was in my 18 to 25 years, I looked like Bruce Lee. I was shredded. I was a skinny little, kid. But I don't know what happened in my 30s or whatever. I started gaining weight and started worrying about money only and not taking care of myself. But the truth is, the bottom line, I'm using that as an analogy because it's the same with trading, it's the same with everything else. You got to be disciplined. And no one is going to care if you're disciplined or not. You have to do it regardless of what anybody else thinks. And so when it comes to making money and growing money, back when I had my call center guys, and this is another thing I'm kind of embarrassed to say, but when I had my call center, I was doing about 12 million a year in gross revenue. This was from 1999 to 2008 or so, making a lot of money. And I was spending it like a drunken sailor. I had my own private limo with my own private driver. I had a gated estate with horses. I got 2 or 3 golf carts, not because I needed them, but because when I brought my friends over, I wanted us to be able to race around the property. Like stupid money. And then when we went out to bars and clubs, I would just buy everything for everybody. I was the man. But what I wasn't realizing at the time is everybody was just using me. And I was, when I had a big business problem and I had to stop doing that, only a few of those people still hung around and were still friends. And those are still my friends to this day. And the point is that if I would have invested that money that I was making back then, instead of, spending it like that, because, when you're making big money, you don't think it's going to end. You think you're just going to keep making more. You don't realize. This is why these young kids that are out there flashing Lambos and condos in South Beach, Miami, making trading or whatever it is they're doing, selling on Amazon. They're going to learn their lesson. Easy come, easy go. They're just flaunting it, the cash, trying to look cool.
I heard washing machine.
It's going to happen to them because it happens to everyone that way. You got to be a good custodian of money in order for more money to come to you. You'll get your chance to make a lot of money, but if you're not a good custodian of it, you're going to have hard times. And then you're going to learn that lesson. And then next time you have a chance to make a lot of money, you're going to start doing the right thing with it, which is protecting it with everything you have. And so, and investing it. So, I've gotten used to the saying asset rich and cash poor. I don't mind being asset rich and cash poor. I could have millions of dollars in cash in the bank, but I don't. And the reason why I don't is because if I did, I would spend it and now I invest it instead. So I have a lot less cash, but I have a lot of assets that are, going up in value and, securing the financial future. But at the same time, that's a strange balance. And a lot of people aren't used to it. And a lot of people don't like doing that because they feel, oh, man, if I don't have a lot of cash in the bank, I feel nervous. Okay, well, I don't mind that. To me, that's positive pressure. That makes me work harder. But I also know that if I had to liquidate something, I have something that's of value that I bought that I could always liquidate if I had to. But the point is that back then I had 3 or 4 houses. I had a condo on the beach and I didn't rent any of them. They were just extra things that I had. It was stupid. I was just being dumb. And I'm certainly not bragging. This is embarrassing for me to tell you guys, but I was like, if I just would have rented those other places out, I could have made money, but I didn't worry about it because I had money coming in from the call center. But, the call center, I lost $1 million a year contract and got hit with a $700,000 tax debt and the real estate market crash all at the same time in 2008. I literally went from, $50,000 to $100,000, weeks or months to zero and end up owing money. And then when the real estate market crashed, all those properties I had were now worth less than I owed on them because I didn't pay any of them off. I didn't invest in anything. So I learned a big lesson there, guys. That's why when I teach now, I'm teaching from, trust me, experience. I have become a millionaire and lost it 2 times over before doing it a 3rd time. And so I know how to do it, but just like the gentleman a minute ago with his trades, sometimes you have to learn those lessons. You have to touch the stove. You have to get burned. You have to lose in order to learn what you did wrong so you don't repeat the mistake again. And so I know we're not looking at charts at the moment. We're not taking trades right now, but I think sometimes this stuff is more important for you to get the big picture here. Let me just share this again real quick. So I would really urge you, if you haven't, come in here into the school and watch this video right here under Advanced Concepts, the Mindset of a Trader, Profitable Trader. And I'm not going to play it right now, but you can come in and watch it. And yeah, it's a good one. And that's just the beginning, guys, because the only way to really learn is by experience. I always tell people not to touch the stove, but I also know for a fact that you're not going to really learn why you shouldn't touch the stove until you actually touch the stove. So unfortunately, you got to get burned. You got to have those losses. You got to lose at the casino and at the slot machine in order to realize next time when I come in and win like that, I'm leaving. Right. But you're not going to know to do that until you've actually done it, lost it, and be like, shit, I should have left. You got to experience it all. So with that being said, guys, we got plenty of people in here that have a lot of experience winning and losing and then finally dialing it in. And that's really what learning the skill is about. It's finding your skill set, finding what matches and melds with your personality, whether you're a scalper or a swing trader, midterm, long term. Everybody's got a different skill set. And the reason why you don't know what yours is yet is because you got to do all of them before you realize what you jive with. TJ, when he came in, he was a scalper and he loved it because TJ lives in Las Vegas. He was already a gambler. He already likes that high paced, a stressful environment of making it big and making money. But not everybody likes that. Some people are chewing their nails off when they're scalping. So if you don't like that, then don't do that. But figure out what works best for you, and then figure out your strategy for maximizing that. Once you get to the point where you do have hundreds of thousands or even millions of dollars in your account, and I know some of you might think that's so far off, but it doesn't have to be far off. But if you can just imagine it for a minute, you will get to a point where you don't even want to trade. You're going to wait for the big setup. You're going to wait for the bear market bottom to go long. Because if you had $1 million in your account and you went long with 200 grand, only, let's just say only 1%, you went long with, 10%, you went long with 100 grand at the bear market bottom, and you rode it up. Like from here, for instance, the bear market bottom of the last bull market in 2022, the last bear market year was a 15,500. So if you would have taken 100 grand on that trade and went long, once we determined we were at the bottom, that was 700% to the upside, 706. That's a 7x. So if you would have had 100 grand, I'm just gonna tell you, and you could do this once a year, once every couple of years, guys, and you won't even have to trade the whole rest of the time. So 100 grand times 700%. That's 700 grand with no leverage. And if you would have went long down here with 100 grand at 10x leverage, you would have made 7 million in this 3-year period. So would you rather do one trade every bull market and make 7 million, or do a million little shorts and scalps and all the stuff along the way? Well, in the beginning, when you're learning, you're going up, you're going long, you're going short, you're doing all this stuff. But once you grow your account and you fine tune this and you get to that point where you've actually build up some money, then the goal is to trade less, not more, and to risk less. Now down here, if you would have went long with 100 grand and you put a 10% stop loss, you're really only risking 10 grand. But as soon as this pumped up into profit, and now right here, by the way, let's just say, I'm just trying to break this down so you can really get the visual here, guys. Let's just say you did go long here with 100 grand, and right here, you're up 13%. Okay, you're up $13,000, $14,000. You move your stop loss into profit. Therefore, you're not risking that 10 grand anymore. And then once this pumps up to the next pump up, now you're up 55%. You move your stop loss up to under the previous support level. I know it's easy in hindsight to show you this, and it's hard while you're in the middle of this, because when we get up to here and it drops all the way down to here, you're getting worried, you're getting scared, because there goes a lot of profit. So sometimes people just close the trade out up here and then wait for the next entry. You could do that too and still grow your account huge. But let's just say you stayed in. And we got people in this group that did. We got a guy who's a Air Force pilot mechanic, or not pilot mechanic, an Air Force jet mechanic. And he got in at 22K, right about here. And once it popped above 30,000, which was major resistance, he increased his leverage to 100x. And it never came back down to retest. So he got lucky. I think the last time we saw, and we actually use his example on a slide on our webinar. I think it was up at 50 some thousand, and he was up like, I don't know, 1,800% or something like that. On Bitcoin, and it never came back down. So it never even came back to retest. So he's hopefully he's still in that trade, or maybe he got out now. But the point is that there is a way, guys, to trade less and make more, but you got to get to that level. You got to grow your account first. And the only way to do that is by taking profit when you're in profit. Grow. It seems like a slow, steady thing, but it may seem boring to some of you who are, looking at the action part of it. Just like walking out of the casino when you have that big win, even though you just got there, Seems boring. You're not there to stay and party and enjoy the lights and all the free drinks. But that's how you continue to make money and grow.
Nico,
So-
if I can just say, on this chart, well, the chart you were just showing, it's not quite the setup that I think the XRP before, but I'll show you on this one where you just showed where it bounced up to what, maybe 29,000, I think it was, mid-July.
Oh yeah, I'm going back right now. Let me see.
Yeah, right there. So if you just went up and with the bottom, I mean, I traded commodities in the 90s, so I learned a lot of charts. I used to get a charting service in the mail every month, and they would mark a little bit up, but you literally had to do it all by hand and stuff, all the commodities. So I learned charts really well. And one of the basics ones was a 1, 2, 3 bottom. So for instance, that bottom, you're never gonna get the bottom unless you're really, really good. And it probably most different luck. If you go right back a little bit more down to the bottom of that start, that would be the number one position. And then it would come up and it's not quite, but when you come up, those two peaks would be number two. When it comes back down and it breaks that green line and breaks those second peaks, that would be the three position and you would get in right there. Like you were kind of went up to it, I think on Friday, we were kind of showing, hey, you would get into this position. You're not going to get the bottom, but you come in here, you still would get a ridiculous return. If you go to the XRP, I think you were going back to, if you go back to
Absolutely.
like,
An example would be here. This is the bear market bottom at 15.5. And then we finally broke a higher high here. And then we pull back to retest. This would have been just as good of an entry. It's at 20 grand instead of
Right.
15.5, but that would have been an amazing entry. So you're
Yeah,
waiting
'cause
for the break.
yeah, because that is actually October 2024. My mom went to be with the Lord in April and we were selling her house. And the closing was supposed to be a week before. And I'm like, look, we need to close the house. And they were getting on me. I'm like, look, my brother, in that week, Bitcoin jumped from 29 to like 36, 37,000. We sold to close the house and I went into Bitcoin a little bit more. I'd already had position, but I wanted to buy more. I mean, it was a ridiculous inheritance. But
Yeah.
if you go to the XRP chart that you had, and even on that BTC chart that goes back to like I think it was midpoint of 2022, there was a similar kind of 1, 2, 3 setup before it peaked up. But on the XRP chart, for instance, right there at that bottom, was it April of this year, for instance? You would basically what you do is you would look at a 1 year span, so January to December. You would look at the low point, so that low point would be number one. It would pop up to that high point right after that. That would be number two, come back down to number three, and then as soon as it broke that number two peak, that's what you would get in. And you kind of went into that, and you would follow it up to the top. And you went into that a little bit on Friday. You were saying this is where you would get in for a more. You're not going to probably get that number one position, but. And the second thing that I learned over the years is that sideways channels. So this is a sideways channel. So when that breaks, finally that sideways channel breaks to the low below it or to the top, it's usually continues on up or down, whatever way it breaks for the length of that channel. So if it helps people, what I would do, I would just have a watch list, green, yellow, red, and look at charts for those two patterns, 1, 2, 3 bottoms, 1, 2, 3 tops work the same way, and sideways. Put those in my watch list. These are green, these are red right now. These are moving to yellow each week. And once a week, just look at them and then say, okay, these are my position. You don't have to look at a million different charts. Just look at those couple different chart patterns. And when they break, they're usually they're simpler and they're easier to see. And it helps people that are beginning or even if you're older like me, I've been trading since 8th grade. So I'm 62 now. And I've
Yeah.
just learned different things and taught myself how to do these things. Even sitting here and learning from you guys, I'm always a student. I've coached wrestling for 40 years. So I'm always willing to learn new things. So I hope that helps.
Yeah.
What
Thanks, Keith.
firm was that he was saying he looks at it on?
Tyler, are you talking to us?
Yeah.
Say that one more time.
I was saying, what time frame was, I think that was Keith. What
Yeah.
time was he saying he looks at that on for the 1, 2, 3?
Well, probably the one I
right.
was just showing you on.
Yeah, no, I just look at it, have a watch list, and you can just spend like say, Saturday, spend an hour and look at your watch list and just look at different charts, see that ones that set up that 1, 2, 3 bottom or 1, 2, 3 top does the same thing for shorts or sideways channels, and just put those in your watch list. And as they start to form, red might be, hey, this isn't here yet, or yellow is, hey, it's just about there, a week or two away, and green's like, hey, this is about to pop, and simply just have a watch list of those, a dozen or two. Doesn't have to be 500. I know.
On the daily though, or are you looking at different time frames also?
What I would do is, like I said, I look at for instance, the 1, 2, 3 bottoms, you would look at a 1 year chart and you would look for the bottom low, or you would look for the top all time, the high for that year, and then you would go from there. So you would look at a 1 year chart, and then it could probably be on a daily. And then, like I said, like kind of like Chad talks about, I look at the weekly, I look at the daily, then I go down to say a 4 hour chart, and then to a 1 hour chart. And then when I go into the trade, I go into like a 15 minute or a 10 minute. I'll put on a 3 or 5 day moving average to see where the peaks are. And then I'll put on the trade. And this isn't for like an hour or two trade like John. This is like maybe for a swing trade or even a longer term trade. So if it helps. And it works for gold and silver and all these other ones too.
Thank you.
You're always welcome.
Yeah, thanks. Thanks for that. Let me show you guys something else. Notice some, this is XRP on the daily. Let's just go back a little bit. This, by the way, this goes down. Whoops. This goes down much further, right? It comes up, and then we're in a sideways channel. And sometimes it wicks a little lower, sometimes it wicks a little higher. I'm not sure. There's the top of this one. Let's just do it like that. We hit all the way up here. Actually, it's a little higher than that. And then here's the bottom. Here's the top of that channel. Here's the bottom of that channel. Here, it hit the top, came back, bounced on the bottom before breaking out. Here, it touched the top of this bottom channel and then wicked down to the bottom. Touched the top, wicked down to the bottom. Top, wicked down to the bottom. Once it broke out, what was he just saying? It says it basically goes to the depth, the size of this channel right here. When it breaks out to the bottom or the upside, it usually goes up that high. Also, when it breaks out. And so what do we have here? Well, we have kind of another channel. There's the bottom. Some bounce, wick down to the bottom, bounce, wick down to the bottom, bounce, wick down, bounce, wick down, wick down. Same kind of situation here. We got the top of this one, and sometimes it hits the top, sometimes just bangs on the bottom of that top, bottom, and then when it breaks out. So this time, though, however, on XRP, when we went up to $3.60, this is back in 2018, we did in the bear market come all the way back down to this below channel. So could that happen again is the question. Let's just look at this overall. Was this a channel? This whole thing right here a channel? Is this the same channel as before right here? Is it just coming back down to retest that channel all the way to the bottom of it? But this is a long running channel here, guys. And then it broke out above it and went just above it and then held support. So this little thing that we've been in this whole time up here is all we're doing is holding on the top of this channel right now and holding it as support. But is it going to continue to hold support? Is it possible to come back down this channel is the question. But as you can see, incrementally, every time it's broken out of a channel, and by the way, this does go back further, but this chart only goes back so far. It's every time it gets to the next floor, it holds. And so far it has. So what do we need to do here? It needs to break out of the top of this channel. I got that line down way far. This is the anomaly right here where we wicked all the way down to $1.25 on XRP. But for the most part, it's always it's held in on this zone. Sometimes it wicked to the bottom. Sometimes it touched the top, wicked to the bottom, touched the top, wicked way below, came right back up. And here we are right now in the middle of this little zone. And it is dropping, guys. I mean, we're at the $1.87 right now. It does look like a strong red candle, but I am on the daily. Let's go down and see what it looks like on the lower time frame. It's got very little buying pressure. This is market cipher A that you're seeing with all these. This is all whale action here. Anybody know the what's it called? For market cipher, what these
Yellow
orange
X's,
yellow X's are?
manipulation. So whales for the
Whale
yellow X.
manipulation. And we've seen whale manipulation before. We've seen whale manipulation right before a big pump to the upside. Whale manipulation right before a big pump to the upside, especially when it gets down in the zone. We're in the middle of this zone right now, guys. And we're also, if I'm looking at, this is on TradingView, it looks a little different on Phemex. But if I go down, we are hitting this level right here. Let's go back a little further. See what this level looks like.
Which chart are you using for the XRP to get that long on TradingView?
That's the big drop on October 5th. This is XRP crypto. The crypto market right here. Just XRP crypto TradingView. The TradingView chart. These are all different platforms. This is Coinbase. This is Bitstamp. This is Binance. This is Kraken. Bitfinex. I'm on the TradingView crypto chart for XRP. Now, if I add, let's go and add some market cipher B. Let me get rid of these other indicators down here, and let's add market cipher B to the bottom of this and see what's going on here on the local level. Here we are coming in. On a lower time frame right now. Look at this. There's just so much buy and sell action here. So we got to go to a higher time frame. We do have money flowing out, obviously. I tell you this, guys, this drip, 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 lower lows, lower highs, cascading waterfall effect never lasts. It doesn't continue like that. It does end. Question is where? Here's the last example of it. It ended at the bottom of this channel. After a big wick down, coming into this channel right now. If I take this over, guys, look at all the times we hit this level and bounce. Right here, boom, right here, boom, right here, right here, right here. These did bounce here because none of them held below that. Bounce, bounce, and we're hitting it right now. So could we wick down lower? Yeah, but is it going to hold underneath that? It hasn't in a year. But is this the time it does? I don't know. We got money flowing out still, and it's kind of wide. What we need is this. We need this curve around in a green dot. We don't have that. This is the daily time frame. Let's look at the 4 hour. On the 4 hour, we did have a turn in a green dot, and then followed by a red dot and a further dumping. But we're coming down to this zone, guys. We're coming down to this zone, which is the floor, the bottom. As if you just look, it doesn't get any lower than this. We're there now, so we need a curve around. It's probably due time. Might wick down to that line. Let's go to a higher time frame. Let's look at the weekly. On the weekly, we were going below the dotted line and this line right here. And as you can see, this one was a sharp bounce. Let's just go back and look what happened then. We were same thing, guys, falling, falling, falling. Lower highs, lower highs, lower highs, lower lows, lower lows, lower, bounce. And then climb out when we got this low. This, guys, was July of 2024. We have not been down this low in over a year. Don't get me wrong, the price wicked down that low right here, but that immediately got sucked back up, and that was a fundamental, probably happened, I think it happened when Trump announced tariffing China at 115%. Let's look at back here when we got this low. It was a bounce. And although we didn't immediately spike up, we never came that low again. We climbed up, out, and then new high. And this, guys, is when this is back here when XRP was going through court proceedings, all kinds of crazy shit, you know, I mean, all kinds of ups and downs. And now we have all this positive bullish news and all these catalysts out there, which should bring us out of this. But and there's also some conspiracies and some whale manipulation happening. And when you hear the word whale manipulation, guys, and we talk about it, just think this. People who want to take your crypto from you. So that alone should tell you, don't give it to them. Hold tight. Stay in. Don't sell. They're manipulating the market to get it lower so that they can buy back in at a lower price. What should you do? Well, first, don't sell what you have. And second, buy more. Dollar cost average on the way down. I mean, I can't even believe that we can still get XRP under $2 right now. Just think about Bitcoin when Bitcoin was like $10 and then it dropped down to $5 and everybody's like, oh, it's going to 0. Well, I'm going to wait till it goes to 2. Imagine if you could go back and buy like anything under $10. And you might say, well, yeah, but you're comparing XRP to Bitcoin. I think XRP can outperform Bitcoin. I think XRP could get to, I know somebody might think I'm crazy, but XRP could get to $100,000 per coin, just like Bitcoin did. But in order for that to happen, it's gonna have to be handling not only the most of the financial markets on cross-border settlement, but also the derivatives market. But then we're talking about trillions of dollars a day in transactions. And it has the capacity to do that. And it could happen. It could happen before anybody's ready. So I just want you guys to be ready. Like when it does, when all of a sudden, I know I've used the term flip the switch before, but could it really happen that fast? It's not going to take 20 years. It's not going to take 10 years like Bitcoin did. I mean, XRP's been around since the beginning, 2011, 12, 13. But during the majority of that time, they've been in a legal battle. But that might have even been manipulated. That might have even been just to artificially hold the price down until they were ready to use it for what it was meant for.
Hey, Nico, I don't think you're crazy. I actually think we're crazy to think that we're going to see you anymore after this flip the switch. Are we even going to see you around anymore?
Of course. Yes. I love what I do. I'm not,
all right.
I could have $100 million in the bank. I'll still be getting online with you guys. I might be in a different location while I'm doing it, but.
Nice. Oh, that's good to hear.
But I want you guys to do it with me so that in case you disappear, I won't feel guilty.
This is a short question. This is stepping away from trading, but if you're a hodler and you're dealing with Bitcoin, Ethereum, and XRP, what percentages of your portfolio would you have in each one of those coins?
I mean, I think that Ethereum could go to $20,000. If Bitcoin gets to 250,000, I think Ethereum will be at 20,000. It's usually, I mean, 10% of probably Bitcoin. And so I think Ethereum could be a nice 10x from where it's at right now. 20, 30 grand. But XRP has the ability to 1,000x from where it's at. Whereas Bitcoin, could Bitcoin 1,000x from where it's at? Yeah, I guess it could. All it would take is mass adoption and a billion more wallets coming on board buying Bitcoin, which could happen because think about this, guys. When I use Facebook as an example, when Mark Zuckerberg created Facebook, He only did it for his college, the college that he was in. He only did it for like a couple hundred people. When he got to 1 million people, Google offered him $1 billion to sell it to them. Do you think at 1 million people that he would have ever, even then, do you think he would have ever imagined that there would be 2 billion people using Facebook? Because that's where it's at right now, half the world. Pretty much half the population of planet Earth that actually has access to the internet has Facebook. Because the other half doesn't even have internet or phones or anything. Because believe it or not, there's a couple billion people on this planet that have nothing.
Nico, do you think that XRP will either surpass or supersede ETH? Or is it a separate entity? And
Oh, for sure. I do. I think that. I think it's far superior. As far as price is concerned.
Yeah. And quickness, right? And all that stuff.
Yeah, I think it's going to happen faster than people think. And it's not because I'm just watching Jake Claver and all these people. I'm looking at the meetings that the powers that be are having with Ripple executives and the founder and the CEO and all of the contracts that they're signing. And yeah, there's people like Jake Claver that are certainly confirming all that. But I'm looking at what's really happening also behind the scenes. I don't just take anybody's word for it. And it's big. It's revolutionary. It's something that could probably control, be in the back end of the world's financial settlements for the next 100 years or 500 years as blockchain technology takes over, because it is, and it's inevitable. Now, whether XRP is the leading crypto to do that or not, or whether someone comes out with something better or faster, I don't know, but it certainly will be handling a good majority of it, or maybe even, who knows, maybe not a majority. Let's just say 20%. If XRP can just handle, I think they said that if it can control 14% of the transactions, it would be $1,000 for XRP. So 10,000, something like that. Go ahead.
Going back to the other guy's question, he said, "What?"
Oh yeah, as far as allocation,
maybe more XRP than ETH.
I do.
Yeah,
but that's just me. I do. But that's because it's also more affordable. I mean, you can buy a lot more XRP for $2 than you can Ethereum. But I'm not going to make the same mistake I made with Bitcoin. I had 50 Bitcoin when Bitcoin was $300, and I sold it when it hit $9,000, thinking I was a genius.
Those guys got your money, right? Well,
oh man. And then it dropped to 3,500 after that. So I thought I really did good. I got out just in time. But at 3,500, it bounced and went all the way up to 19,000, then 39,000, then 49,000. That's when I really said, what is this crypto? What is this Bitcoin stuff? And that's when I started looking into futures contract trading, because I was already trading the stock market then. And, I was telling my friends to buy Bitcoin at $1,200 and they weren't listening to me. And, yeah. I got a good friend of mine. I got one friend who bought 10 at $1,200, and he's still to this day still has all 10. Never bought any more, but he got 10. So, and that doesn't even seem like a lot now, but back then you could have bought, imagine if you could buy 1,000 or 10,000 Bitcoins when it was $3, guys. That's what you can do right now with XRP. And I personally think it can. It doesn't have to get to $100,000. All it has to do is get to $250 to make some of you multi-millionaires. Not even multi-millionaires, but multi-deca millionaires. 30 million, 50 million. And I'm not trying to sell a pie in the sky dream, guys, because I don't know if that's going to happen, but I'm pretty confident it will in over the next couple of years. But I don't know. Can't make any promises. But I'm prepared for it this time. I'm not messing around. And and if it drops much lower, depending on what the world is looking like in the next 6 months or so, I'll probably just buy more. But I don't feel it when I buy more. I don't because I'm not buying hundreds of thousands of dollars worth at a time. I'm buying a little bit here, a little bit there, but it's adding up. It's stacking. And I do that with Bitcoin too, by the way. It's just that I'm not as excited about Bitcoin anymore because it's already reached that 6-figure mark. I do think Bitcoin will grow to $1 million and $5 million over time, but that's only a 5 to 10x from here, whereas XRP could 100x to 1,000x from here. All right. With that being said, let's just take a couple quick looks. We got onboarding. By the way, guys, if you're brand new and you're on this call, we got onboarding starting in 5 minutes with Bill, and he has already shared that link. It is in the Discord, in the trade chat, right here. He just posted it. It's also in the announcements channel right here. He just posted it. It's also in the Zoom chat right here. He just posted it. So there's no excuse to miss that. If you're brand new, even if you've been on one before, get on it. That's right.
Nico, I'm just trying to clarify based on some discussion about the chart and how things are looking. Are we still kind of like going long, or we should be going short, or just kind of like take a wait
whenever
and see?
you're this close to the bottom, like this is the bottom zone. I was long, but I got taken out. But whenever you're this close to the bottom, because we were bouncing and bouncing and bouncing, and I think wherever we were, whenever I was showing you, let me go to a lower time frame. We were in this little bit of we came down and we bounced on support. We broke out of this and held support. I think I was long somewhere in here, but we still, I always said on the last few calls, we have to break out of the downward trending resistance, which is this overall channel we've been in from the top back here in XRP and also Bitcoin. And so since we're so close to the bottom right now, guys, we're banging on the bottom. That's not the time to go short. Just like up here, when you're at the top, it's not the time to go long when you're up here. When you've climbed from the bottom to the top, you short it and you put a stop loss up here. Not always, obviously, but if it breaks through this and holds the support, then you want to stay in your long, or you just re-enter long. But it's more likely to drop when it hits the top of a channel, and it's more likely to bounce when it hits the bottom of a channel. So you don't want to short here. You want to wait for the bounce. What does the bounce look like? Well, here, it's more like here. We came down, 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 down. We hit the middle. We did bounce, but we made a lower high. We come down and make a lower low. And we come up and made a lower high. But right here, we broke out. And we made a higher high than this point. And then we come down and we hold support and we make a higher high. So if you would have went long here, yes, right here, you would have been broke even. Right here, you would have went a little negative, but you want to long the breakouts of the downward trending channel. So here it would be here, or we come down and bounce on this and we break out here. So the safest thing would be to do is to wait for the bounce. Now, on the other hand, if it comes below this red line, you don't want to short. You want to see if it holds underneath like this. Because once it wicks down here, what a lot of people's knee-jerk reaction to do is, oh, it's dropping, I'm going short. And as soon as they do that, bam, it comes up and cuts them. That's why they say you don't chase a falling knife right here. Oh my God, it's dropping, I'm going short. And you go short, boom, and it just comes right back up, and you should have went long instead. So whenever you're at the bottom here, guys, that's the time to consider getting long, not short. And we're almost there. I was already long on the last couple of calls, but that's because I'm like I said, I'm taking a little bit more risk, but I also put my stop loss pretty tight, and I don't mind losing a little bit on my stop losses, because to me it's like third time's a charm sometimes, right? But you can also wait and be patient and wait for the actual breakout. And so the breakout here would be this downward trending channel, bouncing, coming back in and getting up above this overall resistance line back to the upside. That's why I have this thing here. This is, you know, once we break out of this, this is where I'm expecting it to go back up to the top. And it has to go to the top of this before it could break out of that. So when you're at the bottom, it's more likely to stay in this channel. The trend is your friend till the end. Here's a trend, breakout. Here's a trend, breakout. Here's an overall sideways channel trend. Now, is it possible to get below this? Yeah, but we don't worry about that until it does it. And if it does, it has to hold as resistance. What was support has to hold as resistance and actually go down further than where it broke. So like this one right here, if this would have dropped like this all the way to here and bounced here and then came down lower than here, that would have been a good entry to go short. But if it just comes down here and bounces right back up, no need to short this. You just wait. So sometimes it's better to not be in any position while this is all happening until you have a confirmed breakout or a confirmed what they call confirmation or retest. So this would be bounce, breakout, confirmation. Retest is confirmation. Confirming the previous resistance as support. That's when you enter. But see here, it went out, came right back in and held as resistance again, and then fell. Here it went out, came right back in, went out, came right back in, and held as resistance again. So it's not confirmed unless it holds a support and gets higher than where it broke out. But that takes discipline to wait for that. You might see it come up, come up, come up, come up, come up. You're like, oh man, I'm missing. I should have got in down here. And then it finally breaks out, comes down, and it could come all the way down. And that's what I think is happening right now, guys. I think it's going to double bottom. You see this? Let me just zoom in. See this drop right here down to $1.81 or $1.80. We might just double bottom, boom, and then break out. Double bottoms are likely to bounce and break to the upside. Double tops are likely to bounce and break to the downside. Double bottoms are more likely to break to the upside. This one, and especially if there's a higher high there, but this one is getting close, guys. But look at that. It's wicked. It's wicking. Does that mean it's going to keep falling? It could. You see this wick? It could just be a long wick and then a bounce. Oh, look, look, we get to the bottom of that on the lower time frames. You're starting to see green. This right here. Anybody want to tell me what kind of candle that is? On the 1 hour time frame, that is a Doge candlestick, Doji, and that is otherwise known as a trend reversal candlestick. We got a trend reversal, green. Now, maybe it's bouncing on this center line right here and it's going to come back above, or maybe it went below it and it's coming back up to retest as resistance. Let's just wait and see. That's where patience comes in. We'll look at Bitcoin real quick, guys, and I'm going to wrap it up for the onboarding call. It started already, so if you're new, just get on that. Look at what Bitcoin did. Bitcoin was in this upward trending channel, but as you can see, on a few occasions, it wicked below, held the support, bounced, wicked below, held support, bounced, bounced. Oh, let me just draw this in the right spot. Bounce, wicked below, bounced, 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 went below and retested as resistance on this line and dropped, but dropped to where? Is it going to be another one of these where it just comes down? It's still a higher low? Or is it now going to hold underneath that? I don't know. So rather than trying to guess, we just wait. I don't care about getting the bottom here. What I want to see Bitcoin do is break out of this downward trending channel and hold, because this was the all-time high right here, 126. And we've been in this downward trending channel coming right back down to this major support and resistance level right here, this blued out zone. And we are in it right now. It's like quicksand. But we need to break out this, not only that, but this upward trending, this white line right here, that's a long running support line going all the way back to the bear market bottom. And we broke through it here and held as resistance. So we're below that and we need to break above that and the downward trending support in order to get back above it. In my opinion, we need to get above all this. So until that happens, it's downward trending for now, but I'm expecting it to maybe double bottom where that little green circle is, double bottom, and then bounce out over here. That would be, and if it doesn't do that, guys, this is what I'm looking at. If it doesn't do that and it falls below this level into the 70s, below the 80 and into the 70s, then I'm going to say that the next support level would be
Nico, I know you got to go. Are we way below the Gaussian channel?
yes. The next support here would be right there, and guess what that is? Let me just zoom out and show you real quick. Right there. Let me just show you what that is. Previous all-time high, 68K. Somewhere in this range, guys, that's what I was telling you, which is the 68 to 73.5 zone. That would be the next level if we cannot hold above 80. I'm hoping we bounce right here on a double bottom. Double bottoms are likely to bounce, guys. They're more likely to bounce up, and we are coming down for that to happen right now. I will keep you posted in the group. I will look. I'm watching this all day because I'm gonna enter here no matter what, and I'll give a signal. But that doesn't mean it's gonna hold. But that's my inclination is to long a double bounce, and so doesn't mean it will hold. It's possible to go through it, but I'm gonna bet that it's not. And then if I'm wrong, I'm gonna reverse. But I'm gonna wait for a confirmation before I reverse because it could wick through, take me out, and then wick right back up. It could still be a double bottom. It just might be lower than this, a little bit lower than this. But if it just goes through and holds a support under here, then we're probably going to see lower lows. If you're going to ask me to bet, if you would ask me if I had to put my life on it, if I had to like guess or bet rather, and wager on whether we are going to drop lower or not, I probably, it'd be hard. It'd be hard, but yeah, I think we might. We do have to hold right here. We do have to double bottom here and bounce out. Otherwise, we're going down further. And as long as we stay above 70, we're still in the bull market, as far as I'm concerned. Because we could bounce anywhere in this zone here from, 70K to where it's at right now and make a new high for the remainder of this year. Totally doable. But it's kind of moving slow right now, and that's good. And that's a good sign as well. It was dropping, but oh, we got a nice pump right now. Actually, it looks like it might be trying to hold as support at this level. This is Bitcoin. It did hit 85K right here. Boom. And they've got a nice little pump, but that means nothing unless this gets a higher high. Higher than what? Higher than this last support resistance level. It's got to get above this and then hold that as support. But if it just is lower, if it comes up to here and then goes lower and comes up to here and goes lower, then we just have lower highs and lower lows. But that wick I told you about, that Doge candle, that is a trend reversal, and this does look promising. It is the first time we had this nice big drop and a little bit of green here, but this is a little bit more and bigger candle, so we'll see. But don't be scared, but it's better sometimes to sit on your hands and wait for the right entry rather than try to guess exactly when it's going to go. We're in the middle of this right now. We did not double bottom. The double bottom is right here. Right here. We would have to come down to this level. in order for that to be a real double bottom, but it is possible to have just higher lows on the way out, but it sucks kind of because we didn't have higher highs. So, and we have higher lows, but not higher highs, then that is this wedge that we're in, which is okay also. I'll change the color just so you can see what I'm talking about. It's this one. And we're not really in it anymore. We already broke out to the downside of that. I mean, unless I really put this to the tips of all of those. I mean, I guess I could do that too. We could put that to the tips of all of these booms, but we did hold the support on this line. So if you do it that way, guys, maybe we're still in the wedge. Let me just zoom out and show you. We have a horizontal resistance and an upward trending support. It's possible that we're still in that wedge. Boom, boom, boom. And then what would need to happen here is we break this orange line, which is the downward trending resistance. And we finally break out of this horizontal resistance and then break out of this previous upward trending support back into it. It's a lot that would have to happen. All right, guys, I'm gonna wrap it up. Let's see real quick here. Any last minute questions? Let me just look. I might have something I'm supposed to be at that I'm late on. Oh yeah, I do have a call that I'm late for. Just don't be too overly anxious, guys, to just be going long or short. Wait for the better setups. Wait for the real bounce. Chad, myself, we will give our opinions on that. And I'm sure Chad has already posted in the group where he's looking at getting entries. I'm going to be doing the same thing, but I would say it's that double bottom that I was just, just showing you at the 80, probably the 80K range and the $1.80 for XRP, 80K for Bitcoin. All right, guys, have a great rest of your day. Let's see what's today, Monday. I'll see you on Wednesday. And I'm going to also, I'm trying to work on another special guest to bring in. I'm not going to announce it until I have a confirmation, but I'll let you know when that happens, that we'll be speaking on one of our calls. So you guys have a great rest of your day. Stay positive. It's just a matter of fine tuning these, but I mean, we're looking for the best entries. And right now, because when we're in this little channel, this little sideways channel, it's not good to be going long or short until we have a breakout of this channel. And I think it's imminent. I think it's going to happen anytime, either to the top or the bottom, one way or the other. All right, guys, have a great rest of your day. I'll talk to you soon.
Thanks, Nico. Appreciate you.
You're welcome. Thank you. Oh yeah, by the way, guys, we are below the Gaussian channel. I forgot to show that. Let me
That's all right.
I'll just show it real quick just so you can see it. Long-time history. For those of you who are still on. And we are holding underneath it as resistance right now. When this turns red, if the Gaussian channel turns red on the 5-day, let's go look at the 4-day. Still green, 3-day, red. But if it turns green or red on the 5-day, then that's not good. We'll talk about that when it